would you give any advice to people who aspire to be technical analysts in future, people who are still students but want to be technical analysts?
Easy answer, I'll bullet point this. Number one, nobody in this business is here to give you advice that can make you money.
Right.
You have to do your own research. That's the hard part. If I were to tell you, look, oh, so you want to make money, okay, good, who doesn't? But you're going to have to spend 3 painstaking years understanding the markets, reading books, looking at some videos of legendary speakers like Ralph and Martin Pring, and you're going to have to spend 3 years doing this. Doesn't sound too good because firstly you want to make money, and secondly you basically want to start making money really fast. But that research is absolutely pivotal if you want to be a winner in the long run. One. Second, and this is my, it's something I feel really sad about because I see it, happen so often. There are certain biases that you wake up with, and you're going to treat them with a certain response that you think aligns with that bias that you've already created in your mind because of whatever. Maybe you heard someone on TV, so you were looking at a stock and the chart was bullish, and 2 p.m. in the afternoon the company declares results and the results are not in line with expectations, and you think let me just hold off here, let me not buy. There is a misalignment of processes here. You looked at the chart, you formed an opinion which was bullish, but you were hit by some noise, which is anything that's external to your core process, and you decided not to go with your assessment because of that commentary or the results, which was really external. You didn't know what the number was going to be. Nobody did before you looked at the chart. Right. So you're letting something influence the original plan. And what is sad about this whole situation is what's influencing that plan is not even from the realm of technical analysis, which is what the chart was about. Often, I know some amazing traders who've made money consistently, and consistently there is the key word. But they've had their experiences with not sticking with their plan. So you have a plan and you want to make it actionable, but then these influences can be strong enough to kind of dissuade you from making that original plan deployable.
Right.
So you might have the best charts, you might have the best processes, but unless you can stick to whatever it is that you saw, consistency will be a problem. And you will always be pulled in different directions, and eventually that doesn't get you the alpha that you really were in the business for in the first place. So it's important to know what is relevant, and it's also important to know what is not relevant.
Got it.
Yeah. The third thing really is trade real money. I see a lot of people talking about, oh, you know what, here is something I built, and I simulated a real world environment, and this strategy made me like 69% in the last 1 year. And I think you'll agree with me here, when you're advising clients, the world is very different.
Right.
But you put $100 of your own money, and suddenly the world will start looking extremely different. So any model that you're evaluating and wanting to make a part of your investment process, make sure that model has been deployed in a real world environment, ideally in real life trading. Make sure you question the efficacy of the model across all 3 market cycles. When the market was trending up, great, did well. When the market was trending down, did well. So it does well in trending markets. But simulate a situation where the market went sideways for 3 years. Did it still do well? If it did, and do some outer sample testing as well. If it did, you've got something going there. So